MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim, and happy April Fool's Day.
Yeah, I see the Financial Post canceled their April Fool's Day plan, saying reality just bit.
I think that was probably a wise decision.
As we have an RCMP detachment in BC that just announced their, instead of a canine program, they have a police cat program.
I could imagine a pig, maybe a hog or something, but not a cat.
Well, if somebody has allergies, a cat will get them out of the house once they start sneezing. Ross,
That's
on the
true.
show, you talked about housing market recessions, but last week Stats Can said GDP from real estate was up. How does that align with what you're saying?
How does that align with what we're saying? Well, it sounds like it's really counter to what we were saying. We've been saying in the show, not only last week, but I guess going back, well over a year ago in the show, we talked about how housing markets dictate recession. So, yeah, I'm surprised. A lot of listeners probably heard that, and well, what is Ross talking about when StatsCan says these GDP numbers were increasing? So that's a good one to bring up today, Jim. So, what I would like your listeners to know is there's a component of gross domestic product called real estate brokerages service fees. They also call it leasing services. And how the government has collected this data over the last 30 years is they do what's called a survey of real estate brokers. I'm not joking. This is the honest truth. They do a survey of some real estate brokers who in turn give them revenue numbers, supposedly, that their brokerage is earning. If you looked at the report last Friday, Jim, you would see that the real estate services sector income increased in January. Now, let this sink in. The housing market posted fewer sales. House prices, the houses that were purchased at lower prices. Real estate commissions just dropped a little bit on average. Yet somehow, all of a sudden, revenues from real estate brokers increased. Well, what StatsCan doesn't understand is this is a survey that has been laughed about at real estate offices across the nation when we first became aware that it was being done. For the first 15 years of my career, Jim, I didn't even know that this sort of thing was going on. And I'm working at the number one real estate office in Canada at the time. And our broker wasn't submitting any reports. I didn't know of all the brokers I knew. Let's say, maybe 250 brokers that I was aware of. None of them submitted a report. I don't know where they get these numbers from. But what I know is that it is a false, fraudulent, incorrect number in gross domestic product because there was less real estate brokerage commissions, lease fees, fees of any sort earned in the period in question than there was earlier. They did not increase. There is no way to come up with an increased number. So even if they were saying, Ross, this is actually closed sales, so this is when the commission was coming into the real estate office. No. There is not enough commission earned to get an increase being recorded. It is a substantial decrease.
Ross, are they just making up these numbers?
Yes, that is exactly what the real estate brokers do. What StatsCan doesn't understand is a real estate broker could not submit a negative view on his business because the banks use those numbers to allow leverage to take place in the brokerage business. So that we always have these fudged numbers. Even if they were to supply commission trade record sheet data, which that's how your commissions are recorded in real estate brokerage. Those numbers would not be the accurate numbers. They would be numbers created to have an illusion that the brokerage is busier than what it actually is. That number is false. It has always been false. I can go back and follow that number in StatsCan data, and I could show every single month where it is factually incorrect. Now we also have residential construction numbers, which magically went up. And everybody out there is saying, oh, well, residential construction was a positive gain. No, it wasn't. There were homes that were sold years ago in the pre-sale construction phase that, as the housing market slows down, builders rush to get started. Builders rush to get started because they want them to close prior to the housing correction taking place, prior to people looking to get out of the deals. This is the same pattern that builders have followed over and over again for the last 30 years. Of course, new starts increased. That made it look like residential construction has increased. And all it meant was the builders who had previously sold condos, some as many as 5 years ago, are finally getting the shovels in the ground, increasing residential construction. It's why we have always said on this show, these are latent measures of a housing market. The new sale construction, you have to look at how the housing stock is currently under construction in Canada today. When you look how that housing stock is constructed, municipally, geographically, where it is being dispersed, how each of those geographical areas are having a different housing stock constructed, where that housing stock is on its building phase, then you can understand just how latent housing data recorded in gross domestic product is latent. It is not recording an increase in activity in the marketplace, as it was misreported to Canadians all weekend long. Your recession, caused by a housing market slowdown, is a result of net wealth decreasing. That is what stalls an economy. As net wealth begins to fall, spending stops. As spending stops, consumption stops. As consumption stops, it's a self-fulfilling prophecy. Housing prices drop further. Historically, the run-ups are shorter than what we experienced since 2013. We never in this country ever experienced a run-up as long as the one that we had. Now we are going to pay the price. The price is a probable recession. Can the government do anything to stall this, Jim? I don't believe they can. Because this is something that I would love for your listeners to understand. Rising house prices are predicated on falling interest rates. Stable interest rates cause a housing correction. Rising interest rates cause a housing correction. A housing market to go forward is totally reliant on falling interest rates. So that is not going to happen. We may have a return because if the economy is in a recession, the Bank of Canada pulls out their hair and says, oh, we got to get interest rates back down again. But you can only get them back down to where they were before. You can't go lower. The Canadian home buyer, the housing market, we have a metric that we call house price velocity or house price momentum. We're still arguing internally how we can word that properly. Your housing momentum, your housing velocity is a 100% causational factor of a recession, because it is forecasting the net wealth of the nation. And as net wealth falls, you enter a slowdown and a recession. Whether or not you hit a depression or not, I don't know, because I am not old enough to have tracked data through a depression. I have tracked it through multiple recessions. There is no argument with this. This is a black and white issue to us. House price velocity right now is wiping out net worth as we sit here talking. You are going to be hearing falling house prices get announced across Canada. If you hear of a stabilized housing prices, that means housing prices, real house prices, are really dropping when you don't know about it. Just look out in Calgary what happened.
We'll have more with Ross Kay right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Ross Kay. Ross, realtors in BC are making their March sales stats public. They say they've hit a 33-year low. What does the public get from that?
What do the public get from that? Okay, so we call these W charts. So internally, we call these W charts. Now, it could be like the Joker with his big grin, and because he's laughing at everybody who follows him. But a W chart is a chart produced by realtors, and if you'll see it, and it shows sales going up and down each month. Often you'll see at Jim, they'll produce it as a year-over-year percentage change, and that creates an up and down movement, which we call the W chart. It is insane that a realtor would tell the public that sales are up 10% one month, they are down 10% the next month, and they're level the third month, and the fourth month they're back down another 10%. That does not happen in a housing market. What the stats show, which your March stats are going to show, it's already shown in Calgary today, Jim. So you don't have to believe what I'm saying. You can go to the Calgary Real Estate Board, CREB, and see it live right now. Housing stats are months and months and months late. That's why we know this to be true. If you look at the stats in the Calgary Real Estate Board, they said sales were down about 11% in February. And now this month, they say sales are only down 2% for the month of March. And we say sales are down identical in both months. You have to make an adjustment on sales every single month for every single real estate board in Canada. You have to adjust for the number of days in the month where real estate agents are reporting real estate sales. Those months never are the same. This month, this year, 2019, the closest month previously would be 2013. You have to go all the way back to 2013 to have a comparable month. Now, you can't use 2013 in a direct comparison because the rules and regulations 6 years later are totally different than what they were back in 2013. If the rules and regulations were identical, then you could go back at 2013 and compare that to your 2019 numbers. But you can't compare 2019 to 2018. So what I'm trying to say to your listeners is this. 8 months of the year on any given year, and in other years, 9 months. 9 of the 12 will be seller beneficial months. The stats will benefit the seller. 4 months of the year, and the odd time 5 months, stats will benefit the buyer. Now, what I would like your listeners to understand is you should not rely on any of these stats. Because is this month a month where the stats favor the buyer? Is this month a month where the stats favor the seller? You don't know. In any realtor site that you go to where you see W charts, up and down, up and down, up and down, what you're seeing is skewed data because they are not looking at a comparable year-over-year comparison. Our charts, Jim, are flat lines. So there is very little wiggle room month to month in the way that we look at our charts. Now, again, when we're looking at March stats, we're actually using that in comparison to the September-October market for the fall, because we only use the stats ourselves to make sure that our sales mix calculation is correct. So in other words, where there's an irregularity in a monthly reporting, we need to see where that irregularity was because we know it will catch up with it the following month. W charts are simply a result of that. Real estate is built to the benefit of sellers. That's why housing stats are reported same month, year over year, so that 8 of the 12 months it's going to favor the seller. And in the 4 months where it doesn't, organized real estate over the years has just accepted that hit for that 1/3 of the year. Because generally those 1/3 of the years are not in prime selling season. So even though 2/3 of the reporting favors the sellers, it also favors them at key reporting dates. Key dates where governments make decisions. Now, do I know whether or not that is a coincidence, or do I think maybe over decades and decades, governments themselves have reacted in their reporting because of how the housing market reacts? I don't really know. All I know is this is what the truth is. This is how it works. So, your March sales stats in British Columbia are actually going to be worse than what the real estate boards report. Because March sales stats are going to include sales from February. They took a hit in February, so March would look better. If you go look at the Calgary Real Estate Board today, that's exactly what you're going to see. But what's nice about Calgary is they have side-by-side stats. So if you look at the sales difference missing in February versus the sales change in March, you're going to see they're almost identical. It kind of debunks everything that you're hearing. It's why when we come on the show and we tell everyone, you are not seeing data. You are not seeing housing market metrics on these other websites. If a website has a year-over-year comparison of any single housing market metric, like sales or prices, it is a false chart because you need to adjust for these differences in the calendar and for the differences in how things are reported. And then when you adjust for those, you don't get a W chart. You get a nice straight line. And from that nice straight line, you can forecast. Now, you have to be able to understand when a market turns. When you're reading March's sales stats, you have to be comparing it back to September and October's first-time buyer sales, as we're looking through April, May, and June, we're looking at totally different segments of the market again to understand what is going on. So if you see a W chart, a chart that goes up and down, up and down, up and down, Google it. Go ahead and Google house price change in your local area. Anybody who produces a W chart, you can't believe. They're telling you a story. They haven't adjusted for the extra trading days that take place in one month versus the next. They don't understand the difference between seller beneficial months and buyer beneficial months. Because if they did, they wouldn't have it on their charts. The sales stats that you're going to hear over the next couple of days, like those in Calgary, were determined way back in the fall or early fall of 2018. They were not determined by today's market. The reason why we were able to call the peak of the market in Vancouver in March of 2016, months ahead of when the real estate, the foreign buyer rules were brought into bear, is because that's how we measure a housing market. We're measuring all categories of buyers, how they're active in the market, what the decisions that they're making, and then what the consequence of those decisions will be on other home buyers months and up to a year and a half later.
We'll have more with Ross Kay right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a peritite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener from Calgary, was asking whether he should enter the market now or wait it out.
Well, I mean, this listener in particular, hopefully he was listening in the past, because he's going to see today the average selling price in Calgary is going to be reported at about $30,000 less versus what it was at this time last year. $30,000. I really don't think the general public understands the magnitude of a $30,000 house price correction in Calgary between 2018 and 2019. I really don't believe the general public, academics, politicians understand the magnitude of this, Jim. In British Columbia, let's go back to BC. Between peak buying period in British Columbia of 2016 and today, which the numbers that will be released by your local real estate boards across British Columbia over the next couple days, you have seen a $100,000 drop in what the average buyer was paying. This is a magnitude of housing correction that North America has not seen, Jim. The Canadian housing market, the way that we record it, the way that we're looking at it, remember, we're not here to sell houses. We're simply here to be an unbiased, informed, and educated observer of the housing market. We are seeing a full-scale housing collapse in this nation. This is of a magnitude, Jim, we have never seen before. The province of British Columbia has lost more net wealth in the last 3 years than they have in their life, like in the history of British Columbia. The province of Ontario has lost more net wealth in the last 12 months than it had during the entire housing correction of the 1990s. what I'm trying to say to your listeners is this, to this listener in Calgary. You should not be buying into the market now. You should be waiting until the market has troughed, reached the bottom, and has started to go back up again. Now, you can't rely on organized real estate stats, monthly stats, bank economist stats, realtor stats. You can't rely on that because they're still measuring markets. Let me put this to the listener. If you had watched the Ontario housing correction throughout the 1990s, you only saw about a $10,000 maximum drop in average selling price province-wide. That's all that you saw. At the same time, homeowners were losing hundreds, almost $200,000 of their house's value because that's what they were selling for, those type of a discount. But the average selling price didn't change that much because the average selling price is actually the average purchase price. What you're going to see in Calgary is, Jim, you're seeing home buyers in Calgary paying $30,000 less than what the home buyers in Calgary were paying last year. What you're not going to see is they're going to be getting about another $40,000 worth of house. So a $30,000 correction is actually a $70,000 correction. But because purchase price is misrepresented as average selling price, those innocent people in Calgary don't know that this is how much the prices have changed in the last year. If you look at all the house price metrics, MLS, HPI, benchmark, Internet National Bank, HPI, average selling price, if you look at all of these metrics, they have never recorded these kind of price declines. Look at your benchmark price in Vancouver, for an example, for the listeners there. There are houses in Vancouver who are selling at 50% off their peak price. 50% off. Yet what's the real estate board say? Average change off peak is what, 8%, something like that?
Yeah.
I mean, I don't even look at their benchmark price, so I don't know how much, what kind of a phony number that it's putting out to your listeners. This listener in Calgary, look, but yes, it is a great buying opportunity in Calgary because you're buying at low prices, high quality, at low interest rates. That is win, win, win. But if you had simply waited this 1 year, your $30,000, you spent $30,000 less. Your mortgage will be exactly the same, like the interest rate that you're paying, meaning your mortgage payment is either going to be lower, or if you're smart, you're paying down your mortgage quicker. Your property taxes are going to be lower because it takes about 6 years for the assessment data to line up to the difference in house price change. I don't care what the assessment office says. If you track these things, you can see that this is the delay that happens. So you're win, 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 win. But why not just wait and win a little bit more? And I'm not even saying that you have to time it perfectly. Why at the bottom of the market? No. All you have to do is watch where the market is going, and as the upswing happens, you take action. Now, you also got to be careful. You're not reading a false positive. Like all of the bank economists and realtors and mainstream media reported to the Canadian public last summer about the stabilizing housing market. Housing market is returning. They got a wake-up call over the last 60 days, haven't they? Their forecasts were blown out of the water. They look like idiots. And they are. They're commenting about something they're not qualified to comment on. You keep your mouth shut when you can't comment properly on the largest expense of a family over their lifetime. The home is the single largest expense that any family will incur, other than possibly income tax, in their lifetime. A small change. I mean, you can make a $50 change advantage at the time that you acquire real estate, and it's going to be $500 30 years from now. It is a magnitude of wealth that I really don't think, Jim, that people can even comprehend. How you structure your homeownership life is going to impact where you are when you're 60, 65, 70 years old. It's going to impact how much money you have at retirement. It's going to impact what you're able to pass on to your kids. It's going to impact the quality of life that you have at a time when you're ready to start enjoying life, because now the kids have grown up and, you've got some free time. That it is really, really important that people like this listener from Calgary times the market, and it doesn't have to be perfect, but they need to time it in such a way that they minimize their lifetime expense of owning a home. Because when they're 65, 70, those small change differences that you made 30, 40 years ago are going to be your financial rewards when it comes time to retire. We have tracked thousands of home owners over their lifetime of ownership. The broadest homeowner variables that we have ever seen. We've gone from 23% mortgage rates at peak mortgage rate in the early 1980s down to 2% mortgage rate at the lowest rate in the fall of 2017, which we may be going back to there now. Recession, surging economies, huge variations in inflation rates, income growth rates, income tax rates, property tax rates, government transfers. All of those things combined, it gives you a different perspective on home ownership and the housing market. This listener in Calgary, simply make sure that you're buying at the right time. And I tell you, you need to wait right now.
Ross, with all these governments trying to drive down housing prices, slapping extra taxes on them like they have in British Columbia, are they in fact causing a recession accidentally, or do they know what they're doing?
Okay, so they don't know what they're doing, and no, they're not causing a recession. No more than foreign buyers inflated the value of Vancouver homes, or no more than investors were inflating the value of Toronto homes. When you sit back, Jim, and you look at the data, and you look at it from the perspective of how the housing market functions, the topography in Vancouver is totally different than the topography of land in Toronto. The topography of land in Vancouver dictates the city of Vancouver is going to be taller per square mile than the city of Toronto. It is two different housing stocks because of the topography of the land that the houses are built on. You have a problem in Vancouver that there are not enough single detached homes to meet the demand. There is not enough land within Vancouver to build. You have to go out towards Langley and Abbotsford in order to get those single detached homes, regardless of what anybody tells you. That is simply what's going to take place over the next 25, 30 years. Vancouver is going to be a tall city. It's going to get taller and taller and taller. That's just the reality of it. Where Toronto doesn't have to get that tall. The topography of the Greater Toronto area means there is an abundance of land within a quick commuting distance of Toronto to build on. It is almost exhaustive when we look at it, Jim, the amount of land that's available, that can be accessible through government policy. What the governments need to understand is the foreign buyer tax did not stop foreign buyers from buying in Vancouver. That ended in March of 2016. Months before the foreign buyer tax came into play. You're seeing the new data being released by Canada Mortgage and Housing Corporation. Well, again, this is being framed totally incorrectly by academics and housing analysts in your area. If the government wants to know the impact of foreign owners on the British Columbia housing stock, pull the land transfer data and find out what it is. Call up FinTrack and demand that all of the FinTrack forms, one for every home sold that was from the seller and one for every home purchased by the buyer, has been completed or was legally required to be completed, is sitting there waiting to be collected. Don't go out and telling people that you're with guessing and then going back a year later and revising your numbers, which gives the soothsayers in the marketplace an opportunity to say, oh, I was right, or, oh, the government was wrong. Everybody's still wrong. You do not have a foreign ownership count in British Columbia, in Vancouver. You do not have a foreign ownership count. You have a limited data set over a limited period of time on a limited methodology that is producing faulty data. You need to have an accurate account of that. But all that said, Jim, all this said, it really makes no difference. Had the Real Estate Board of Greater Vancouver not used the benchmark price and instead had talked average selling price in British Columbia, the illusion of house price gain caused by foreign buyers never would have happened. It is the Real Estate Board of Greater Vancouver's fault. I am putting 100% blame on them because they have used the benchmark price. When a whole bunch of houses, a few houses, not a whole bunch, a few houses, a few handful of houses in a month, sold in Kitsilano, Point Grey. And then it gets presented as a 30 to 40 or 50 or 100% house price increase. That's lying to the public. That's what the benchmark price does. It's why it is a flawed methodology. It's why realtors across Canada fought against it being implemented. That is the reason why consumers, homebuyers in British Columbia believe this stuff. That's why they went out when you had the $37,000 boost to condo purchases, and they went out and bought in a correcting housing market. They believed this stuff. They believed it because everybody told them it's the truth. The government can do whatever it wants. Okay, so this is what I'm trying to say to our listeners today. The Canadian housing market, the way that we look at it, is a $500 billion a year business. Understand what we're saying. The Canadian housing market trades about $500 billion worth of real estate each year. It's not the $260 billion that organized real estate talks about. It's not the $200 billion that the new homes market talks about. It's not the I don't have the total calculation in my head, Jim, but it's not the $50 billion rental market that everyone talks about. It's everything in aggregate. In aggregate, you're looking at $500 billion each year of activity in the housing market. There is no other aspect of the economy that is of this magnitude. If anyone thinks that a few foreign buyers, a handful, a dozen, 10,000, let's say they buy $25 billion in a single year, that is not going to skew the prices. What it will do is skew the benchmark. It's not going to skew your average. It's not going to skew the conversation. The only thing that gets messed with is that benchmark price. It is a $500 billion marketplace each and every year. It's why it's so important to the economy. It's why it's so important to Canadians. It's why that we're telling you that it is always the leading indicator of a recession. There is nothing like it. When we talk about it as an ocean liner, we're talking about the biggest ocean liner you can imagine. It takes a tremendous amount of energy to get it going. It takes even more energy to keep it up to speed. Any little tiny increase in speed takes a massive amount of energy. And yet, when you turn off the tap, it starts to slow down immediately. And the slowdown is way quicker than the speed up was. This pattern has repeated itself over and over and over and over and over again. It's why we have no worries in our forecast. It's why we have come on this show and we have no problem making the statements that we're saying about recession, the housing market, house prices, sales. I would look like an idiot if I came on this show and with over 2 years of previous shows recorded where someone could go back and find a mistake. I really believe you would be hard-pressed to find a mistake in any of the last 2 years' worth of shows because I know all the forecasts have been correct. And it's not like we're geniuses. It's not like we're smart. It's just this is simply how housing markets work. As long as you know the simple math behind them, you know exactly what's going to happen. Clearly, governments who report commissions, real estate commissions, and real estate leasing fees increased in the last GDP report do not know these numbers. They do not know how the housing market works. They do not know how real estate brokers communicate the facts or the stats. And that's why, Jim, everything we hear from politicians, generally speaking, it's just simply not true. They want to make houses more affordable, build more houses. That's 100% true. Don't let foreign buyers buy them. Don't let the real estate board present a benchmark price. Tell the realtors we want all your FINTRAC forms. Get an accurate count of foreign owners that own the foreign owners of homes in your area and communicate that to the municipal politician. Set your tax policy, property tax policy, in such a way that your infrastructure can be rebuilt. Make sure that the province funds the homeless, not a city, not property taxpayers in one city funding the homeless for a whole province. When you have drug problems, the opioid crisis in Vancouver, that is a provincial jurisdiction. It should not be left to your local politicians. All of these issues, all of them, from our perspective, are rooted in a false understanding of housing market intelligence. All of these problems, we believe, are easily fixed when the truth, the facts, the data is looked at.
Ross, thank you so much for chatting with us.
Hey, thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. If you have any questions for Ross, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.